Good morning, Dr. Khosla. Khosla, did I pronounce that correctly? Once again, Terry Dyer here. I'm a broker, mortgage broker with Hanson Loans right here. And you and I spoke briefly on the phone a little bit earlier this morning. And I mentioned I was sitting out in my patio having a cup of coffee. And I really didn't have a chance to explore your information. And as a guy that's been doing loans for a long time, probably like you going in to see a patient, you like to read the chart first. And, I like to read yours. As a matter of fact, as it is, I like to know a little bit about the person with whom I might be speaking. I do a lot of clients, a lot of my clients have a little more complex, sophisticated situations. And so, it kind of behooves me and makes their lives easier if I know a little bit about what I'm walking into before I call them. And so that's why I went ahead and Googled your phone number, found out that you're from Dallas. Or at least looks like you just are transferring here from Dallas, which, I went to high school in Richardson, J.J. Pierce High School, right off Coit Road. I think it's the right side as you head north and up Coit Road. And then LBJ Freeway took me around to White Rock Lake, where I used to go fishing, and then Lake Ray Hubbard. But yeah, fond memories. Back then, I enlisted in the Air Force in 1977 from Dallas, Texas. All right, so, excuse me, enough about me. Back to you. Now, I wanted to find out what kind of property you might be looking at. So I went ahead and looked up the property that you're living in. And I see it's owned by Kurt Reindell, looks like, Kurt and Laura. And they live, well, they're showing their mailing address as their home address. So I'm not sure. Usually if it's a rental, they have this as a different mailing address would be different. Nevertheless, here's the public record information about the refinancing. The original loan they got looks like that 2014. They were refinanced. Oh, just a few months later. Oh, good for them. Okay, so anyway, excuse me. That's the information about your property that you're living in. And I guess you might be considering moving to with some acreage. If you do move to a property that's income producing, meaning that it maybe has an avocado grove or ranch or something, that's necessarily an important factor when getting a jumbo loan, as these jumbo lenders they all have their little nuances. I do primarily jumbo loans. Most of my clients are sophisticated, higher end people that have multiple or complicated tax returns, multiple streams of income, and so forth. And so anyway, that by way of example, I just closed this deal here. What was this? 1.2 million. And here I am, Terry Dyer. Now it's a little bit difficult because these people use some internet agent to list their house because they want to save some money. It was a competitive bidding situation, and that we had multiple offers, but fortunately I was also the lender on this loan. And so I was able to get these folks a really good loan. As a matter of fact, they too went 85% loan to value, just like you're thinking about doing. So Hanson Loans, it says our realtor partners. Well, wouldn't you know it, there I am. And meet our team. Well, I'm also associate broker here. So as a broker here in the state of California, your license is pretty diverse. Only brokers can have people working for them. Agents have to have a broker. And so I have interest in, Realty San Diego, and I'm also a mortgage broker with Hanson Loans. As a matter of fact, this gal right here, excuse me, and I have been working together for 20 years. She used to work for me, and I guess legally I now work for her. But what's interesting about this is that as a brokerage, we're able to go over here and put your information in here, and we license this service called Loan Sifter. And what Loan Sifter does is it enables us to basically search about 60 or 70 different lenders. As a matter of fact, I just typically use our approved investors because, honestly, there's a bunch of people in here that are just no way going to be competitive on a jumbo loan, let alone really any type of loan, it seems. There's different types of programs, and so let's just choose those that are going to best accommodate our needs. Now, an 85% LTV, as I was mentioning or alluding to before, doesn't necessarily require that you have MI insurance or mortgage insurance. There are a couple of great programs that don't require it. So let's go ahead and just take a look at a 30-year fixed. And just want to see if there's any information that I might be missing. Okay, so let me explain to you what you're looking at. Here are a list of lenders. JMac, NewFi, LD Wholesale, that's Loan Depot, Plaza, New Res, excuse me, Caliber and Caliber. Now you heard me mention just a second ago that these lenders have different programs, and so Caliber would have 3 different investors, and that's whose rate they're posting. And that's why you see different pricing for each of those. So they would have a multitude of investors. And those investors might be one, say, as one of our jumbo investors, say Wells Fargo. So we work with Wells Fargo through our conduit. In this case, we have 2 or 3 of them. And that would be using their Laguna Jumbo Fix purchase over 80%, no MI. So this is what an important thing that I wanted to share with you is that, well, let's get rid of the, any notion that you're going to have mortgage insurance or an additional $200 or $300 a month added to your payment. This is, of course, based on the presumption that you do have a credit score that's, going to be near or over 600 or 700, 720. The higher, the better. The increments, pricing increments the pricing increments are in increments of 20. So from 700 to 720, 719, 720 to 739. That's where that's what determines these numbers right here. And these numbers are the pricing. So let's look at JMac. We can do purchase over 80% with no mortgage insurance. This says it's a no prepayment penalty. This was the pricing as of Friday. And this would be a 45-day lock. Now, locks have different durations. You get a 30-day lock, a 60-day lock, a 15-day lock. And each of those locks has a certain variation on what the rebate is. So, not all loan officers are going to be straight up with you like this and tell you how it all works, right? They're going to play games. But I find that the better informed and educated my clients are, the more peace of mind they have, and the easier it is for them to work with me and the pricing and everything because, you know what I know. I'm just performing a service for you that you already understand. So, unlike heart surgery, anyway, let's go back to here. So let's go to 4 3/8. We see 4 3/8, and you've got, excuse me, I lost my place here for a second. 4 3/8, and this comes over. This would be the rate. Borrower points. Now that's the rebate given to you or a cost expressed as a percent of the loan amount. So this would be almost a little over 3/8% of whatever the loan amount was, which is 1,062. Okay, I mean 1,062,000. Now, sometimes there are pricing breaks for under $1 million too. If you go over $1 million, under $1 million. So if you were able and it proved, in your interest, we can explore doing something about $999,000. Okay. But anyway, so that's how that works. 4 3/8. Now, if you said, "Hey Terry, my big goal in life here is to minimize my cost of entry into this home." Some of my clients tell me they have the cash flow, but they don't have the cash. So not so much at this level, honestly. But to tell you the truth, my clients on the other house, they 15% down on 1.2 million. It was a lot of money, and it is for most people. And saving an extra 10 grand or so, which by the way they saved because I represented them, so I gave them $10,000 of their commission back. But anyway, that's what I do. But back to the loan here. If you did 4 5/8, you did a $4,600 rebate. That's a credit to you. And in this case, you see how the pricing changes. Now LD came to the top because they just beat the other lenders in terms of pricing. So while 4 5/8, while Wells Fargo is super strong down here, 4 3/8. New Res. What were we looking at? JMac. Look at the difference in pricing. What exactly? Changed right. Let's go back to 4 3/8. All right. So we're back at 4 3/8, and if we go to 4 1/2. All right. Okay, so that's why JMac fell to the bottom, is because JMac's only giving you rebate up to 4 1/2. Okay, so JMac, the max they're going to give you is 4 1/2 The max rate they're going to allow you to take is 4.5 and get $4,100 back in rebate. What this column is over here is their comp. That's how much these lenders pay to Hanson Loans. I told you, or maybe perhaps did or didn't mention, that we get about 1 3/8% of the volume of money that we send to each of these lenders. You can see here that if the interest rate goes up or goes down, it affects you, not me. We are no longer a party to this money right here. We just get a simple percentage. So years ago, prior to 2010, this used to go to the broker. And if the broker was feeling, they needed to share it, then they may or they may not. And it was really unfair to the borrower, just a fact. And so it's better for everybody today because it really, there are no people compromised. I own a mortgage company, and so I like having my loan officers not be compromised. I don't, I'd rather have something be fair for everybody and get the repeat business rather than somebody come to me wanting a high five because to slam somebody into an expensive loan where they didn't belong. To me, that's not, the way to stay in business. But anyway, moving on, let's go to, so that would be 4.5. Say you didn't want the extra $4,100 and you wanted to stay at 4 3/8. You didn't, see the difference here is really negligible. The difference in payment 4.5 and 4 3/8 is way down here, 53.04 and 50. So you got about $70, 75, whatever it is, $70. There's $79, something like that. Difference, and for that difference, you get about $3,000. Now, the other option that you always have is borrower paid. So this is called lender paid. What that means is the lender is paying Hanson Loans. Okay, so the lender's going to give you some money for rebate. Now, what if the lender didn't pay Hanson Loans? Say that $13,000 in this case wasn't built into this rate. Then what would it look like? Well, then at 4.5%, the $13,000 is still there, but it's all going to you, the borrower. See, there's the $4,000 that was already there and the $13,000 that was getting paid to Hanson Loans. Now this is called borrower paid, meaning that you would pay Hanson Loans, and all of this money would be going to you. So say, for instance, you said, hey, Terry, I really like getting 4.5%, and I really need a lot more money to make this happen. Why don't you give me all of that credit, and I'll pay you $7,500. So instead of you getting $12,000 over here, why don't you just give me all this because it's going to pay my taxes, my insurance, and it's going to pay all of my closing costs, and it's going to be great, and all this $20,000, $17,000 is going to stay in my pocket, and the only thing that's going to happen is my payment is going to go from 4 3/8 to it's going to go up $70 a month. I would say, sounds like a deal to me. Let's do it. So what I'm trying to tell you is I'm here to turn your business. And if there's a way we can massage these fees once we get into these larger loans, I'm all for it. The point here, again, is even with borrower paid, you're not going below at 3.875. What was the other one at 3.875? I don't recall, but you were around 4 1/8 with $1,400 back. That's what it was. So you were into cost at 4 and below 4. So here at 4, borrower paid, you could do 3 7/8, and you get a $2,500 credit. All right. So in this case, your closing costs on a $1.2 million loan are going to be $8,000. Escrow is going to be $3,000. It's just ridiculous. And title insurance another $3,000, so something like that. And so anyway, you get the $2,500 credit all to you. $4,000, 4%, you get $6,500, but still you got to come in and pay Hanson Loans like 3/4 of a point. That's fair, right? I mean, I'll massage the 1.3% to earn your business all day long. So let me help you do this. Let me see if I can show you something that I just did. This is my email. Let's go here. Dropbox. Well, let's see now. I don't know if I want to open up anything to do with that. Here we go. Here's an estimate. Okay, so this is a settlement statement for the house or the property over there that I just closed, and that was $1.2 million as well. And so let's take a look at these fees. You had underwriting $11.95. That's pretty typical. Third party process. What is this? Prepaid interest. Excuse me. Per diem interest or prepaid interest when you're buying a home, you probably already know this versus renting. When you rent, the first thing you do is you give your landlord X number of dollars, right? Then you move in, and you always pay your rent ahead of time before you get the utility of the property, obviously. However, when you're buying a home, you always buy the home and then you get your first payment. Sometimes, between 60 and 30 days later will be your first payment. And your mortgage is always 30 days in arrears. So what happens is if you say, for instance, your first payment was, we close today, right? If we close today, the 18th, and there'd be 12 days before the end of August or 13 days. So it would be 13 days per diem interest to get you to the end of August or the 1st of September. And then your first payment would be due October 31st. Okay? So you're always a month in arrears, but it's exactly a month. So they pick up the per diem interest. In this case, it was from 610 to 71. And in this case, it was $196 a day. And this too was about the same size loan that you're going to be looking at. All right? Now, this escrow is pretty expensive, but also here's the just FYI side note. We'll get to it. Homeowners insurance, county tax reserve, 6 months. That was you're going to end up having to have impound accounts for your 85%, and so plan on this time of year they're going to collect 9 months taxes. So for you that'll be about 10 grand. Excuse me. The taxes are due in October, well, really November. Remember this if you like acronym. No darn fooling around. They're due in November, late December, due in February, late in April. Okay. Prorations. The taxes are prorated. If the owner is moving out next week or today, then they get a pro rata of the taxes paid up until the date that they were due or paid to. And here's this buyer's escrow, $2,700. I personally thought that was a bit rich, but it's not me. It's not the lender that decides who goes. It's typically the listing agent who gets the services or where they're directed. But do remember this, you as the buyer, it's your choice. These things are things that you get to choose. Who do you want to use for title? Who do you want to use for escrow? I know an escrow that may be a little bit less expensive. I was thinking I do a lot of listings, and I have an escrow that doesn't even charge my clients my listing clients a fee. But buyers are somewhat disadvantaged because you don't get to direct the escrow. So anyway, that's a look at what the fees are. Estimated closing statement. This is all public record, by the way, so I'm not really concerned with divulging somebody's privacy, but this will give you a really good idea as to what the fees are going to be. And give or take a little bit, they're going to be very similar. This is our annual homeowners insurance policy. This is title insurance. Title insurance, you probably know what that is, but if not, it's just like, well, let's say if somebody came up and said that they owned your house when you thought you owned the house, who are you going to go to? You're going to go to your title insurance company because they insured title, that you had title to your house over that superseded anybody else's claim that might come before you and make claim to that title. Okay? So they're going to ensure that nobody else has an interest in that property. Now, might that be of interest to you? Well, if it's an older property, if it's been passed down from one generation to the other, there are heirs out there that might come back at some point and make a claim. That can be an issue and has been an issue. Dealt with it. The other things that come up with are property disputes, property line disputes. They will help you with that. They'll send a survey if it becomes an issue. So your title, a portion of your land that would affect title. So those things, you're insured for that. And well, they're insured. The lender is really insured. Recording fees, and this is a new thing that California Affordable Housing. This is something new that Governor Newsom bestowed upon us recently, so it's a beautiful thing. Anyway, so that's the closing fee for something very similar to what you'll be looking at. And cool thing, she's obviously very happy, and this was a very difficult loan to do. So anyway, did I answer all your questions? So you should do, I think, my opinion. If you have the money, if you have the cash, and you're going to stay in the house for a long time, here's the thing: rates are coming down right now. Okay, we might be looking at a little bit of an economic slowing, but for sure, at least baked in the cake, according to the talking heads on CNBC and CBS Market Watch that I check out like 24/7. There's a recession in the offing. There's no word there's going to be a property disaster, but hopefully it just takes us down to, if not negative, to 1 to 2% growth, which is a drastic slowing from 3 where we're currently at. But my only point is I wouldn't want to see you spend a lot of money to get a loan. I wouldn't want you to buy it down for $5,000 to 3/8 of a point, because the likelihood is in 3 or 4 months we might be there. And then I will call you up and say, hey, Dr. Khosla, time to refinance into 3 5/8, no cost. And you won't be saying, I know, Terry, but I just paid $20,000 to buy the rate down or something. And that won't happen. So I think that's the end of my tutorial. Hopefully I caught everything, and that was 20 minutes long, but it's a big loan, and there's a lot to cover. Hopefully you enjoyed this tutorial. Again, Terry Dyer, Hanson Loans. I've been doing this. Did my first loan in 1987. So I've been doing it for a while. Love to help you. Thanks.